IBD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. All right, picture this: relaxing on a beach, touring a world class city, or adventuring into the unknown. If you're like me, how good does a vacation sound right about now? That being said, with economic uncertainty being a deterrent for consumers, how many will be packing their bags? And how do these macro conditions and other news events impact travel stocks? Joining me to discuss if investors can expect travel stocks to take off in 2026 is IBD business reporter Paolo Confino. Paolo, thanks so much for joining me.
Hey, Meredith. Thanks for having me.
All right, let's get right into it. What generally moves travel stocks?
So the thing that moves travel stocks the most is almost always consumer demand and consumer sentiment. If people start to tighten their belts, one of the first things they're going to cut are travel and vacations. So even sort of a hint of an economic slowdown, much less an actual economic slowdown, always hits these stocks really hard. On the flip side, when outlook surprises analysts or economists for the better, they tend to react positively. At the moment, we're in a bit of a complex economy, the sort of K-shaped consumer demand, where those at the very top of the income curve are still spending strong, and those at the very bottom are starting to really tighten their belts. So essentially what that means is premium travel options like fancy cruises and business class flights tend to do really well. And at the same time, so do budget carriers, think Southwest, Alaska, things like that.
There's like something for everyone with when it comes to this sector of the market.
Or maybe something for everyone except for those squarely in the middle.
Right, right. Who? Give me an example of
Uh,
travel stocks in that not
so
healthy middle spot.
I would say it's less about specific stocks and more about certain products that aren't going to get offered as much. So think like a generic economy ticket that isn't sort of the super budget one on a big airline like Delta or United, or maybe a cruise that is not the most upscale version, but isn't either like maybe a river cruise or maybe a domestic one. So those kind of products are going to be less common or kind of less get less focus from the various travel companies.
All right, taking off now. Let's go to airline stocks, which will ascend or descend based on some of these macro or geopolitical conditions.
So we talked about consumer sentiment and economic outlook, which is the big one. Airlines also tend to move based on other big macro factors like fuel prices and geopolitics. I think fuel prices is relatively self-explanatory. As fuel prices go up, so do costs, and margins get squeezed. Geopolitics, when people or flyers, travelers start to think that there might be conflicts in certain parts of the world, then they're less likely to travel there. Perhaps travel to those parts of the world might be entirely shut off, which of course closes an entire market for airlines.
Why are airlines so sensitive to operational efficiencies?
The margins in the business are extremely tight. And so they're trying to squeeze every little bit of profit that they can from their operations, which, as you might imagine, are extremely complex because they involve thousands of routes all across the world. Managing a fleet of 1,000 planes, jets are obviously really complex pieces of machinery. And all this while trying to balance consumer demand and the fact that it's a competitive market. So you still want to stand out and do a good job in terms of marketing yourself. So that's really sort of why those companies tend to really focus on operational efficiency because they're trying to squeeze every last drop of margin out of a really complex business.
Yeah, and airline stocks did fly lower in 2025, but they picked up toward the end of the year. What can we expect to see in 2026?
So the original outlook for 2025 was actually supposed to be pretty strong, or at least quite, let's say, good, if not excellent for airline stocks, at least US airlines, let's say. What ended up happening was the White House announced its broad tariff policy, which obviously took a hit in terms of economic outlook and because people started to be really concerned that inflation would spike, that cost of living would go up, not to mention the fact that things got a little shaky for companies that did business abroad, like airlines. And then on top of that, we had a government shutdown, which saw airports around the country reduce capacity. There was a couple unexpected hiccups that start off the year. Things then picked back up once it seemed like the country wasn't going to go into a recession. And so for 2026, a lot of the outlook remains positive, or I should say, assumes what it was a good favorable outlook like it was in 2025, with the hopes that there won't be a bunch of really unexpected hiccups like there were this time.
Yeah, and the leaders for the friendly skies, who are going to be hitting the highest heights this year when it comes to airline stocks?
So that's a great question. I think we can think of them in sort of two buckets. The first is non-US airlines who had excellent years last year. I'm thinking companies like LATAM, Ryanair, Copa, British Airways. So those are expected to continue to be really strong. Valuations might be a little stretched, but for the most part, there's nothing that seems to indicate that they're going to suffer. Much of the outlook is focused on the big two. So Delta and United, those companies tend to have the broadest assortment of products, as we discussed earlier, premium and budget, even though perhaps consumers don't tend to associate United and Delta with budget products, they do have them. The fact that they're going to be able to pick up not just capacity, which is expected to kind of grow modestly, but raise their prices.
And what metrics do we use, or how do we determine who leads the pack when it comes to airline stocks? So we could talk about this for each of the additional travel stock sections.
So when it comes to airlines, as we mentioned earlier, they are really focused on margin, and sort of the best indicator of margin is revenue per passenger per mile. So essentially, how much money are you getting out of each flyer for the duration of their flight? As you might imagine, longer flights tend to have higher mileage, and so you might want to get the most out of a customer, whether that's the actual ticket itself, ancillary products they might buy on the flight, snacks, beverages, extra check bag, that sort of thing. So that's sort of the big industry metric. And then you also want to look at things like the ability to take price. So capacity, as I mentioned earlier, is supposed to be somewhat modest for the year. And so you really want to be able to see, are airlines able to charge a little bit more and to grow revenues through higher prices rather than necessarily expanding to have more products.
All right, Paolo, now let's get on board with cruise lines. Do these companies react similarly in the market as airlines do?
They absolutely do. So again, broad-based consumer sentiment, really important. The one thing I would add about cruise lines is that investors tend to react really well when companies expand to new routes. The same isn't necessarily true for airlines. If you think about it, there's a lot more flights you can take than there are cruise routes. And so that's why if companies are able to expand capacity, investors tend to react better.
So will it be smooth sailing for cruise lines in 2026, Paolo?
For the most part, investors and analysts are somewhat split. Cruise lines tended to have stronger 2025 than some of the airlines did. And so perhaps investors tend to think that some of the gravy train might be coming to a halt. For the most part, they recovered much stronger than airlines from the April lows. The good news is, though, that they're considered to be more affordable vacation options. So they aren't really as sensitive to some of the economic certainty from last year. Whether that will remain the case, I think, is TBD. One of the other things that I think is worth pointing out is that the industry at times can see stocks move in unison with strong performers. So, for example, last year, in a couple instances, Carnival reported strong earnings and ticked up, and it dragged some of its peers with it as well, which is something that doesn't usually tend to happen for airlines. And just sticking with Carnival for a moment, it did also have record bookings for 26 and 27. It seems like demand is still healthy.
So will Carnival continue to be one of those strong leaders, or are there others that are going to be joining the fleet? I don't know if you've noticed, Paolo, but we like a pun around here.
I have noticed. So the top four stocks to watch are Carnival, Norwegian, Viking, and Royal Caribbean. Like I said, investors are and analysts are somewhat split on which to consider an overweight or a buy at the moment. Generally, Carnival had the best year, and Royal Caribbean as well is considered to be somewhat strong.
All right, Paolo. And finally, let's go to the booking sites. We got to get these tickets. How are they trying to innovate and break into new categories to capture more bookings and combat the travel headwinds like consumer confidence?
That's a great question. So, all the major travel booking sites are trying in somewhat fashion to break into sort of new markets or to offer new products. So Airbnb is a great example. They launched experiences and revamped services. Essentially, right? You can now book an Airbnb and then get like a private chef or a masseuse to come give you a massage when you're on vacation. So completely new market for a company that was previously really only known for lodgings and that part of your vacation, if you will. Expedia and Booking are kind of also have similar products, but I would say Expedia especially is really doubling down on a loyalty program, which was something that you maybe tend to associate with airlines, right? Frequent flyer miles and a bunch of other products that you might use in your day-to-day life, but not so much with travel booking sites. It's easy to understand why it would make sense for someone, something like a travel booking site, right? The more you book with us, the better deals we're going to get, the discounts we'll give you in the future. It's a broad trend that's happening across the industry at the moment.
And Paolo, you mentioned Airbnb and Expedia. Will they be leaders again in 2026 for this area of the industry?
So that's a great question. Last year was a tough year for most of the travel booking stocks other than Expedia. This year, because Expedia had such a strong 2025, its valuation is a little bit stretched. So it's not expected to necessarily outperform the market, although it is projected for some growth. And then Airbnb also is sort of expected to be neutral or to move sideways for the most part.
And how is AI impacting them? Is there a big disruption coming?
So that's a great point. These we're talking about these in the context of the travel industry, but all of these companies are actually tech companies, right? They offer online digital services, and these are the exact sort of products that are going to be disrupted by AI. These sort of big online aggregators whose main service is providing users and customers the ability to browse a huge variety of options are the exact sort of products that are going to be replaced by chatbots that are essentially just going to surface up the specific answers that you've asked for without you having to sort of look through a bunch of options. Again, that's still a ways away, and we haven't seen any sort of major consumer product that can do that at the moment. But that is one of the promises of AI in terms of consumer facing products and how people might use it in their day to day lives.
All right. And Paolo, now that we've talked all about the travel sector, I definitely have been bit by the travel bug. You had any plans this in 2026 to get away?
I don't, but after this conversation, I'm thinking the same thing. I need to start thinking about a vacation.
Here? Yeah. Somewhere, I don't know, somewhere wonderful, right?
No doubt. Maybe
I
wine country, somewhere with good food.
All sounds wonderful. I have very high aspirations to get to Paris, but we'll see if the realities of taking who will be two toddlers with me, how that fares. That might be, I don't know if that will certainly not be a vacation, but it's a trip.
I hope it all works out and I hope you get
Me
to go.
too. We'll see. Watch with me. We'll be watching. Thanks so much, Paolo. I'm Meredith Heyman. This is Industry Insights. Stay right here on IBD for more. We'll see you next time.